Well, it's the week after Labor Day, and summer is unofficially over. As the seasons change, oftentimes so too does the stock market sentiment. In today's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman talks with Business Courier publisher Jamie Smith about the market's rough summer and what could lie ahead. Mike and Jamie.
Thanks, Peg. Mike, thanks for being here today.
Good morning.
Now, the old market saying is sell in May and go away.
Right.
Sounds like that was pretty good advice this year.
Yeah, so as strange as it may seem, the weather does seem to have an effect on the stock market. Warmer months typically worse for the market, cooler months typically better. So yeah, the old market adage, sell in May, go away, simply refers to that phenomenon. And really there's some basis in fact there. That trend seems to hold from year to year. And so unfortunately 2015, no different. If we looked at where the market was at the end of May versus where it is today, it's lost about 8 or 9%. So, certainly this year, sell in May would have been good advice.
All right, so summer's wrapping up. What does that, what does that tell us about the market and what we need to look forward to?
Well, like anything else, there's good news and there's bad news. The good news is that as we move towards end of the year, the market typically improves. So as we go into November and December, we might see a nice boost for the market. The bad news is that first we've got to get through September, which is a notoriously bad month for the market. In fact, it's the only month in the calendar that has an average negative return for stocks. So, we've got the advice of sell in May, which is pretty specific, but it doesn't tell us much about when to buy back in. But if this month continues to be bad, if we continue to see some volatility, that might be a good opportunity to buy in for the long term.
Okay. What should investors be on the lookout for as we're going forward? I mean, we've got through May, September, now what?
Yeah, I think the thing that's at the forefront of everybody's mind right now is the Federal Reserve and their meeting next week and what they will decide to do, if anything, with interest rates. Over the last few months, I think the general consensus was that at their September meeting, they would finally get around to increasing the interest rates. With everything that's gone on the last few weeks, though, in the market and the global economy, that's muddied the waters quite a bit. So I think now it's pretty much thought of as a coin flip, basically, 50-50, whether they raise rates or leave them where they are. Whatever they decide, though, it's going to move the market. Raising rates, probably a negative. Rates the same, probably a positive, but naturally all eyes are going to be on the announcement, which is next Thursday.
Okay, so in the next few weeks we'll be hearing from you again on what happened and
right.
what's that really mean, right?
Exactly.
All right, great. Thanks for being here again today, Mike.
Thank you.